As one of the issues, obviously, at forefront of minds for investors this week, and some of the reason that we're seeing a flight to safety here is the escalating geopolitical tensions. I'm curious how you're assessing that risk and maybe what investors need to keep in mind at this stage.
Well, the first thing I would say is these events are never what they seem at first blush. There's usually knock-on effects. There's fallout that continues as the weeks drag on, and we find out really all of the effects of this interconnected global economy that we have. If you remember back to when Russia invaded Ukraine, we knew that it would affect oil prices, but we maybe didn't expect how much it would affect wheat prices. So something like that, if you look at just the commodity complex and how some of the backlash could continue to happen. And then I think the other bigger thing is that, we talk about geopolitical risk all the time, and we talk about possible black swan events. This is an event that we didn't see coming. I think we had talked a lot about China as a big risk, and then that didn't end up being the catalyst of late. So this is something that we have to be careful about. What is the contagion? Are there other regions that will get involved? Will it get bigger? Will it stay contained? And I think those are a lot of questions that are still very unanswered.
In the interim, we've seen kind of the cyclical or typical playbook of a flight towards some of the defensive stocks here. So where do you imagine that investors might be repositioning portfolios even as this continues to play out here?
Well, I think the typical defensives in a shock situation like this, and I wouldn't say that this has shocked domestic markets yet, but in a defensive situation, you're usually going to see things like staples and utilities. You do see usually a rush into long-term bonds, things like gold, the dollar, especially if the geopolitical risk is international. And some of that is playing out as you would expect. As time goes on, though, because we're still worried about inflation, we're still not totally sure that the Fed is done, and we're still not sure what all of the lag effects of this monetary policy hiking cycle have been, you might see some different rotation into defensives as well, but also more rotation, I would expect, out of some of those growthy sectors where valuations are still inflated.